Welcome, Smart Dollar Resource viewers. We're excited to have you here. Today we're delving into a fascinating topic that has been the subject of much debate and discussion in the financial world. The Clash of the Cultures, Investment versus Speculation, by John C. Bogle. This is a subject that can potentially change your financial outlook, so don't forget to hit that like button and subscribe to our channel. Stay tuned as we dive into the world of investment and speculation. John C. Bogle, in his enlightening book, explores the significant difference between investment and speculation. In The Clash of the Cultures, Investment versus Speculation, he dissects the financial industry, highlighting the clash between the culture of long-term investing and the culture of short-term speculation. Bogle, the founder of Vanguard Group and a long-standing advocate for the individual investor, emphasizes the importance of a patient, disciplined approach to investing. He argues that short-term trading or speculation can often lead to disappointing results, while long-term investing with a focus on intrinsic value is a more reliable path to steady wealth accumulation. The heart of this book is the contrast between these two cultures. Investment, as Bogle explains, is all about buying and holding securities for their long-term earnings power. It requires a deep understanding of a company's fundamentals, a belief in the power of compounding, and the patience to wait for your investment thesis to play out. On the other hand, speculation is about buying and selling securities based on their price movements. It's a game of prediction, often influenced by market sentiment and hype, with the aim of making quick profits. Bogle warns that this approach can be risky, as it's often based on emotion rather than reason, and can lead to potential financial losses. Bogle's book is a call to arms for the individual investor. He urges us to avoid the noise and distractions of the market, to focus on the long term, and to invest in fundamentally strong companies. He also criticizes the financial industry for encouraging speculation and for putting their interests before those of their clients. In the end, Bogle's message is clear. We must resist the temptation of short-term gains and instead adopt a disciplined, long-term investment strategy. By doing so, we can navigate the volatile waters of the stock market and build lasting wealth. Understanding these differences will set the foundation for your journey in the trading world. Every concept in trading has its advantages and disadvantages, and so does investment and speculation. Let's tackle the pros first. John Bogle champions the philosophy of long-term investment. He shows us that it's not about catching the next big thing, but about steady growth over time. It's about buying and holding rather than buying and selling. This approach trims down transaction costs, mitigates risks, and allows you to ride out market volatility. Moreover, it's easier for beginners since it requires less active management and less knowledge about market trends. But of course, it's not all sunshine and rainbows. The downside of investment is its slow nature. It might take years, even decades, to see substantial returns. Also, it can be quite passive, leaving little room for immediate action when market conditions change. Now, let's flip the coin and talk about speculation. Speculation, in essence, is betting on the future of a stock or a commodity. It's high risk, high reward. The potential for quick and substantial returns is what makes it so attractive. It gives traders the thrill of the chase and the satisfaction of making the right call. However, the cons are just as significant. Speculation is highly risky. It's like playing a high-stakes game where you can lose as much as you can win. It requires constant vigilance, deep understanding of market trends, and a strong stomach for potential losses. Additionally, transaction costs can pile up quickly due to frequent buying and selling. As Bogle explains in his book, both investment and speculation have their places in the trading world. They cater to different types of traders with different risk appetites and financial goals. It's crucial to understand where you fit in this spectrum and what approach aligns with your objectives. Weighing the pros and cons will help you make informed decisions in your trading journey. Remember, there's no one-size-fits-all strategy in trading. It's all about finding what works for you and sticking to it. Now that we understand the concepts, how do we apply them effectively? To transform the principles from Bogle's The Clash of the Cultures, Investment versus Speculation into practical strategies, we must first remember the fundamental distinction between investing and speculating. Investing is about the long haul, based on thorough analysis and the belief in a company's underlying value. On the other hand, speculation is short-term, driven by market trends and price movements. So, How to apply this in real-world scenarios. Let's consider an example. Suppose you've been observing a tech company that's been consistently profitable, has a strong business model, and shows potential for future growth. Rather than jumping on the bandwagon of the latest speculative hype, you might choose to invest in this company, confident in its long-term value. But here's where Bogle's teachings become crucial. It's not enough to just pick a good company. You need to stay the course. That means resisting the urge to sell when the market dips or chase after the next hot trend. Remember, as an investor, your focus is on the long-term value, not short-term price fluctuations. Now, let's talk about diversification, another key concept from the book. Don't put all your eggs in one basket. Spread your investments across different sectors and asset classes. This strategy can help mitigate risks and smooth out the bumps in the volatile world of trading. Finally, Bogle emphasizes the importance of low costs. This includes minimizing brokerage fees and avoiding high-cost funds. Every penny you save on costs is a penny earned in your investments. In essence, the practical application of Bogle's teachings involves a shift in mindset. It requires patience, discipline, and a focus on fundamentals rather than market noise. And remember, the goal is not to beat the market every single day, but to build wealth steadily and surely over time. The application of this knowledge is what will set you apart in the trading world. The path to successful investing is not a sprint but a marathon, and with the insights from the clash of the cultures, investment versus speculation, you're well equipped for the journey. While Bogle's book is filled with insightful lessons for every trader. The first key lesson is the importance of long-term investment over short-term speculation. Bogle emphasizes that the key to wealth growth in the stock market is patience and persistence. It's not about quick wins or chasing the latest trends, but about steady, consistent investment over time. The second lesson is the value of low-cost index funds. Bogle, the founder of Vanguard Group, championed these funds as a way for average investors to access the broad market at a low cost. The lesson here is to prioritize value and affordability in your investment choices. Thirdly, Bogle teaches us to stay the course. The market is a roller coaster ride of ups and downs. It can be tempting to jump ship during a downturn or to try to time the market. But Bogle advises against this. Instead, he encourages investors to stick to their plan, regardless of market conditions. The fourth lesson from Bogle's book is the importance of understanding risk. Bogle stresses the need for investors to assess their risk tolerance and to invest accordingly. He warns against taking on more risk than you can handle in pursuit of higher returns. Finally, Bogle's fifth lesson is about the power of compounding. He illustrates how even small amounts invested regularly over a long period can grow into substantial wealth thanks to the magic of compounding. This lesson underscores the importance of starting your investment journey as early as possible. These lessons, drawn from The Clash of the Cultures, Investment versus Speculation, serve as a guide for anyone looking to navigate the complex world of trading. They remind us that successful trading is not about quick gains or risky bets, but about patience, consistency, understanding of risk, and the power of compounding. These lessons form the pillars of a successful trading journey. As we conclude, remember, understanding the difference between investment and speculation is the first step towards success in trading. We delved into the insightful world of John C. Bogle's The Clash of the Cultures, Investment versus Speculation, exploring its pros, cons, and practical applications. We also uncovered 5 key lessons that can guide you towards a more informed and strategic trading approach. But that's not the end of the road. No, it's just the beginning. There's a wealth of resources waiting for you in the description box below. Among them, you'll find a link to the broker app MooMoo, a reliable platform that makes trading as simple as a few taps on your screen. What's more, by signing up today, you stand a chance to win an Apple stock, valued up to $190 depending on the current market price. And that's not all. You could also secure up to 10 free shares. So why not take that first step? Knowledge is power, but action brings that power to life. Embrace the lessons you've learned today and use them to navigate the exciting world of trading. Thank you for watching. Don't forget to like, subscribe, and share your thoughts in the comments. Until next time, happy trading.